many people want to be able to buy shares in these hot startups, and few can, but there is a secondary market. Where are people piling into and how, Emily?
There has been a really big concentration in the top companies, mainly because information is really hard to come by in the secondary market. Venture is already opaque, so if you're looking to invest in venture and you're newer to the space and using secondaries as that tool, you'll look at companies that are getting the most headlines, that are raising the most capital more recently, and that's why we're seeing such a heavy concentration. About over 90% of trading volume on Hive is in the top 20 companies.
And I can imagine that's the OpenAIs of the world, the Anthropics, the Andurils. If you think of crypto names that are still to come out, I think Gemini is looking at some sort of exit. $61 billion in volume. How does that compare to the needs of, say, VC companies that perhaps want to exit certain positions, or indeed the actual workforce of startups who want to be able to sell out and have liquidity on the secondary market?
$61 billion is notable, but for comparison, it's about 2% of primary unicorn valuations, and it's about a third of primary VC exit value over the same time period. So what it means is that secondaries are a vital liquidity valve and have a lot of room to grow, but in its current state, it really only benefits the select employees and investors that have access to these top companies that are driving much of the volume.
What about the volume changing around IPO expectations? There's reports in the Wall Street Journal that as soon as next week, the marketing, once again, of Klarna is going to start. I mean, what will we see in terms of the hype around the secondary market if which company is about to IPO?
So there is a very strong correlation between primary VC exit activity and the secondary market. For example, when space and defense company Voyager went public earlier this year, immediately the secondary market looked at Anduril, which is also a defense company, and they are trading at one of the top 10 companies across multiple platforms. So there is this symbiotic relationship, and that's also because of this pricing transparency. Secondary investors are inherently different than primary venture investors because they have a lot shorter timelines. They don't want to wait 10 years for an exit. That's why they're investing in the secondary market. So as soon as the IPO window opens and there are more activity, then secondary investors will probably likely buy more secondaries.
Who are the secondary investors?
There is a really wide range, but because secondaries have a lower barrier to entry for venture with shorter timelines, like I mentioned earlier, also you're investing in late stage, more mature unicorns that have proven business models. We're looking at more family offices, pensions, more non-traditional investors, most likely. There's also a lot of venture firms that are either creating secondary specific funds, or there are already a lot of established players in the space that look at secondaries as their specific strategies. So there is a wide range of investors in the space.
It is the tale of the haves and the have-nots when it comes to raising money. So is that the case in the secondary market? Are we seeing certain companies in certain sectors totally overlooked?
Yes, so the companies that are really gaining the most attention is correlated with primary VC as well. There are a lot of tailwinds from key policy priorities of the Trump administration, including AI, crypto, fintech, defense, security, and we're really seeing a lot of interest in that space through the secondary market as well.
Lastly, IPOs. Are we going to get a whole spate of them in September, do you think? Is the window going to remain open?
I think the window is slightly open, and it's more of a reset rather than a rebound right now, just because a lot of the companies that we are seeing filing for IPO are aligned with the Trump administration's key sectors, or they are incredibly profitable. Like Figma had a really strong business model and strong fundamentals. So it's the tale of two cities for IPOs right now. You have to be aligned with these key sectors, or you have to have strong fundamentals, profitability, or at least a path towards that.